Hey folks, wild day in the markets. Let's break down what just happened and why Trump suddenly slammed the brakes with this 90-day tariff freeze. So, this wasn't some big brain art of the deal move or long-term play. Nah, this was a scramble. A straight-up reaction. The bond market was melting down, full-blown panic, and the White House had to step in fast before things totally unraveled. Yields were spiking, the 10-year blew past 4.5%, and the 30-year even broke 5% for a bit. That's massive. If Trump hadn't stepped in, investors would have kept dumping treasuries. Mortgage rates, auto loans, all of it would have gone through the roof. And liquidity, poof, gone. We were looking at serious 2008 energy. Behind the scenes, hedge funds were getting smoked. They were deep into basis trades, buying bonds and shorting futures to make small profits with crazy leverage. I'm talking 20 to 1, 30 to 1 type stuff. But then bond prices tanked too fast. Margin calls hit, and boom, they had to dump everything. That panic selling just made it worse. So yeah, it was getting ugly fast. Now Trump paused most of the tariffs, but jacked them up on China to 125%. He's trying to keep the tough guy image, but let's be real, that was a clear backpedal to calm markets. And he's still mad at China because they fired back with retaliatory tariffs. That's why he froze tariffs for everyone except them. But the reality is, he'll probably have to ease off China too. They hold a ton of US debt. If they start dumping treasuries, yeah, back to crisis mode instantly. So again, this move wasn't some clever setup, it was straight up damage control. And honestly, if this was deliberate, if someone actually planned to rattle markets like this, mess with people's portfolios and livelihoods, just to look tough, that's just mean. People's retirements and savings were getting wrecked. You don't gamble with that, that's not leadership, that's reckless. Now the 10-year Treasury auction today actually went surprisingly well. Record foreign demand, yields backed off a little, TLT bounced. So yeah, some short-term relief, but don't get too comfy. The fundamentals, still bad. Recession signals are everywhere. Debt is out of control. The Fed's stuck. It can't really hike or cut. And Treasury, they've got to keep issuing more and more debt. So the big question now is, who's going to keep buying? For me, I'm riding this wave up. Maybe into tomorrow, maybe later this week. But once we hit resistance, I'm offloading and eyeing a clean level to start shorting. The core issues haven't been solved. That's the real story. This market correction isn't done. We're still deep in bear market territory,